Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from December 8th to December 12th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from December 8th to December 12th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with German industrial production data. Tuesday brings Australian NAB business confidence, the Reserve Bank of Australia interest rate decision, German balance of trade, US JOLTS job openings, and Japanese PPI figures. Wednesday features two major central bank decisions, the Bank of Canada interest rate decision, where rates are expected to remain at 2.25%, and the Federal Reserve interest rate decision, with an expected cut to 3.75% from 4%, followed by the Fed press conference. Thursday includes UK RICS house price balance, Australian employment figures, the Swiss National Bank interest rate decision, US PPI data, and US initial jobless claims. Friday concludes with UK GDP and industrial production data, along with Canadian building permits. This week's key market-moving events will be the Federal Reserve interest rate decision on Wednesday and the US PPI data on Thursday. Additionally, the RBA and Bank of Canada decisions on Tuesday and Wednesday respectively will be crucial for their currency pairs. Now, let's go to the technical analysis. This week, we'll focus on the Australian dollar against the US dollar and gold, XAUUSD, as both instruments face significant central bank decisions and economic data releases. Let's start with the Australian dollar against the US dollar. Looking at the daily chart, the Australian dollar is currently trading around 0.6640, showing strong bullish momentum. The price is moving higher above the 20-day moving average, confirming the upward trend. The Stochastic Oscillator is moving inside the overbought area, indicating strong buying pressure but also suggesting the pair may be due for a pullback or consolidation. Looking at important levels, the Australian dollar against the US dollar has support at 0.6512 and 0.6419, while resistance can be found at 0.6794 and 0.6891. Tuesday's Reserve Bank of Australia interest rate decision will be crucial for this pair. The RBA is expected to hold rates steady at 3.6%. Thursday's Australian employment data will also be closely watched. With the stochastic in overbought territory, traders should be cautious about chasing the rally at current levels. However, if the RBA maintains a hawkish tone and employment data comes in strong, the pair could push toward the 0.6794 resistance level. Now, let's turn to gold, XAU/USD. On the daily chart, gold is currently trading around $4,199 per ounce, showing consolidation after recent gains. The price is consolidating above the 20-day moving average, which is acting as dynamic support. The Stochastic Oscillator is moving lower from the overbought area, suggesting some profit-taking after the recent rally. Looking at key levels, gold has support at $4,130 and $4,023, while resistance stands at $4,262 and $4,379. Wednesday's Federal Reserve interest rate decision will be the most significant event for gold this week. The Fed is expected to cut rates by 25 basis points to 3.75%, which typically provides support for gold prices as lower rates reduce the opportunity cost of holding non-yielding assets. The current consolidation above the 20-day moving average is a healthy pullback within an uptrend. If the Fed delivers the expected rate cut with dovish commentary, gold could break above the 4,262 resistance level and target $4,379. However, a hawkish cut or any indication of a pause in the rate-cutting cycle could see gold test the 4,130 support level. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's Fed decision and Thursday's US PPI data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.